Hello and welcome to the Trading Zone. Happy Monday, traders. I'm Joe Teague, portfolio manager at Equity Armor Investments, and with me is
Brian Stutland, portfolio manager also at Equity Armor Investments. Happy Monday, Joe. Kind of a interesting day in the markets. Value stocks down on the day, NASDAQ up hard on the day. So kind of an interesting twist to the day.
great day for the NASDAQ, to say the least. Huge move in the NASDAQ. Semiconductors rocking and rolling. We got some Intel news. We're going to get into that later today. We're going to let people join in, filter in here for just a second. Got some things to go. A long weekend, and I'm sure you had a long weekend too here, Brian. Just curious your thoughts on some of these images we got sharing here.
I thought we were going to be talking markets or whatever here, but yeah, that's a sight for sore eyes right there. Glad I don't have to be seeing that much longer.
Yeah,
that's Matt Eberflus, coach of the Bears, no longer with the Bears anymore. And
I thought a real classy move by the organization as part of a severance package. They let him keep that timeout he held on to. Really nice of them. How's this image feeling for you?
Yeah, maybe that can carry over for him in his next job. Well, now that is a very good image that I like seeing. What a weekend. That essentially salvaged my football season this fall. Michigan beating the Ohio State. And that was great. That was a great game. Probably weather conditions maybe helped Michigan out to keep that a low-scoring game, which is what they wanted. But these games are won in the trenches.
Yeah, absolutely. That was fascinating. I thought more he was going to give Day a flag. They decided to take it back. I don't know. I thought it was a potentially classy move here. Anyways, back to the market. We're going to get into the show in a little bit. Let's just talk about some key stories we've been following. Intel CEO is out. They are maybe looking at a new restructuring. Bottom line is they're behind schedule. Their 18A chip is just not what they said it was going to be. And, they still have a lot of assets, a lot of potential out there, but wow, just not what we're looking for here.
Yeah, it should be interesting how this shakes up. We're going to get into this during the show. We actually even have a trade on Intel, so stay tuned here later on in the show. We're gonna talk about what this shakeup means for them, and then here you see, U.S. job growth. We're going to get some reports on that, obviously, come Friday, and that'll be some telling signs on where we're headed in the economy. Joe, you got any thoughts about the economy, jobs numbers, whatnot?
Yes, I do, and actually, we're going to talk about that as well. Great day today for the tech stocks. They've been lagging behind some of the rest of the market, so some really good catch up. And I think a big part of that has been the 10-year or the long-term rates have been kind of stubbornly high. So I think the jobs report is going to be big on that. We're going to be looking at some charts showing that too. So yeah, this will be really crucial for the economy heading into a new year. Also seeing some stocks flying around. Now we're actually going to be talking about MicroStrategy, Super Micro, another meme stock ish, super high flying stock. This thing is just everywhere. Another boon for the semiconductors today. And of course, also out there is, people are jockeying in the trade war. That's actually something going to be important for the Intel trade we'll be looking at later today. One of the biggest competitors, if they do split off, is a company called Taiwan Semiconductor. If they do split off their foundry, I think that could help Intel in terms of their the foundry business. They would be able to compete more directly with Taiwan Semi.
Sure will. That will be an interesting thing, and we'll get into that a little bit too when we talk about Intel, what a foundry means, what that means for the U.S. government. And how they're integrating with Intel slowly but surely over time. But yeah, I mean, the trade war, what's going to happen? We heard Trump was going to meet with the Canadian government, talk about things there, that they had some conversations. So we'll get into that and what that meant. Last week, we obviously discussed the Trump trade for you and how we'd set up a portfolio for such a trade here. But let's get into it. I'm Brian Stutland here in the Trading Zone, portfolio manager of Equity Armor Investments. I'm here with my colleague,
Joe Teague, portfolio manager, Equity Armor Investments. We're two former VIX option market makers. We're taking the lessons we learned in the pit, hopefully passing on some of that education information to you and let you decide what to do with it with our thoughts on the market. MicroStrategy is a company, essentially a levered Bitcoin company. They decided to use their stock as collateral to make loans and buy Bitcoin with it. They're buying more Bitcoin this week, and they just continue to buy it and buy it and buy it. They are now up to 402,000 Bitcoin in their portfolio.
Oh, man. I mean, this will be an interesting trade. I think, Joe, you have an opinion what they're actually doing. I have an idea of what they're doing, too. We're going to give that to you, how that correlates to Bitcoin, and is this an investable stock? So we'll get into that.
And we're also going to be trading Intel at the end of the show. So stick around to the end of the show for the Intel trade. The week ahead, Jobs Friday. That's going to be the biggest thing of the week. We're going to be talking about how the retail sales went on Black Friday, Cyber Monday today. We'll see that as the week plays out. Are we going to be having a Santa Claus rally? And how's the MAGA trade going to be holding up through all of that?
Well, certainly all eyes are going to be on that unemployment report come Friday, because if the job numbers look okay, that gives the Fed reason to not cut rates as far as they want to. And of course, inflation, we got some of those numbers last week with the PCE number, basically indicating that inflation is still kind of here. It's above their 2% target rate. And so if the jobs number is okay, they don't really need to cut. Maybe that helps to control inflation. And then we get this kind of Goldilocks scenario.
That would be ideal. Let's take a look at the volatility zone here. This is the skew index. This measures the 25 delta put 1 month out in the S&P 500 versus the 25 delta call in the S&P 500. We can see it's just trending lower. We're definitely on the lower end of the range. Not a big surprise into December, into January. You expect volatility to be on the lower end of the range, and then it picks up again back into February.
Yeah, I mean, we got obviously threats from Russia about, using nuclear power. That freaked the market out. We saw VIX futures spike on that. We saw put buying occur. The skew index ticked up. But really, since then, it's like, that reality, are they really going to use, some sort of nuclear imposition on people? I don't think so. And then all of a sudden, the call buyers came back in the market. This market's now moving to all-time highs once again, and the NASDAQ certainly is on fire.
Yeah, maybe some FOMO in some of the FOMO stocks. The stocks you expected to see in the rally. Big month for the S&P 500 in terms of the broader market, but in terms of some of the growth names, it wasn't necessarily there. So that's really starting to pick up this today as we're starting a new month here in December. Yeah, this definitely is a lower end of the range. Are we going to find some support here, or are we going to test this green line here? In terms of a low for the skew index, we'll see, but definitely lower levels of volatility for the time being. Here's what the VIX futures curve looks like, Brian. We're back into the normal shape here. We're after the election. We're now have a lower spot with an upward sloping futures curve here, and we're getting the shape we expected. Now we are the lowest spot. This is us. Right currently, we're at the lowest spot on the curve. Again, something we're expecting in the low volatility month of December.
Yeah, this is a typical shape of a bull market in the VIX futures curve. But let's remember, the reason why we show the 1 month and the 2 month is that has an effect on mean reversion and volatility. And with those sitting much significantly higher here, call it 20% higher, I think there's still some room here where if volatility comes down a little bit further from here, I would probably want to be a buyer with expectations that we trade back up closer towards that 1 month, 2 month, maybe not get back above there anytime soon, as the bull market seems to be rearing its ugly head or very good head for most people that are invested in the market. But a volatility blip, we're kind of nearing a buy side here, I think.
Yeah, and especially some of the biggest bull markets have big volatility blips. We should expect that this bull market would be no different, especially after the new year. Usually around March, you see a little bit of volatility. So that's something we'll be watching forward to as we move along. Looking at S&P 500 trends, we'll get to NASDAQ and the SMH too. This is a chart I've been following. We continue to ride this upper trend line here. We're obviously below it, but we're riding it higher. Just a fantastic move higher. All-time highs here for the S&P 500.
Yeah, but again, that green area that acted as support is now acting really as resistance, the high end of a new trend channel that seems to be developing. So that could coincide again. This might be a time we bump up against that channel in the green. Maybe that's a time to start to own volatility, own VIX futures. I assume our models are gonna probably pick up on that as we sort of kind of hit that area, because it seems to make sense here where I would want to put on a hedge.
Yeah, absolutely. But it's it's up against this trend line, but it's still going higher. It's just racing higher, which is just fantastic news for the stock market. The Nasdaq not nearly at their all-time highs, but still trending higher. Still very much in this bull trend that we've seen since the end of 2022. Looking to make this new all-time high, which the S&P 500 is already at.
Yeah, this trend is the market's never going down again kind of trend, where it shakes people out, thinks you're going lower, hits the bottom end of the channel, and then gets right back in the middle of the channel again. So obviously the market's, the idea of never going down again is not true, but you know what I mean. It's still consistent. The trend is still higher, and I do like Nasdaq stacks right here.
Yeah, and so going from the S&P, the lower beta, the Nasdaq, to mid beta, to the highest beta of the semiconductor index, and we're the furthest away from the all-time highs in the semiconductor index, having the best day today. Definitely a risk-on moment for us too. But really can't quite get this higher high here for the semiconductor index. But I think this is starting to look very favorable. I mean, people can look at charts and see anything they want. Have a bullish view, and I'm starting to see a little bit of a cup and handle here. Brian, you got this and this, and I'd love to see a trade above this and make a new relative high.
Yeah, that would be good for the sector as a whole. But I mean, I think the semiconductor index is narrowing, meaning that there's a handful of stocks that people want to own, and everybody else is kind of dogs, and really technology-wise falling behind. So I think this is very indicative of what the SMH is doing relative to the Nasdaq or the S&P that are sitting near all-time highs, whereas this is not even close. The sector as a whole, if we were to break above there, to me, that indicates that other semiconductors are starting to play catch up on their technology to catch up to what maybe NVIDIA is doing, or at least capturing. And but until then, I probably stay very stock specific within the sector.
Yeah, but again, this for me is like the best leading indicator for me, and I really want this making relative highs to get to proof of pudding that the economy is staying strong, proof that we're going to be seeing more record highs in 2025. And I think the reason this is stalled, we briefly touched on this at the top of the show, is just that we've had this stalling in the core CPI. Now, the X food and energy CPI. Now, if you include energy and food, CPI is falling quite nicely. It's getting closer towards this 2% target. But when you take that out, you got things like rent and housing costs, which are keeping this core sticky, which is keeping this a little bit harder to see the Fed lower rates. I think this is just kind of stuck here. I'd love to see this move down to give us a little more confidence on really what it's all about, Brian, which, we talked about is just this 10-year yield. We're kind of stuck in this area here, not really make any confidence that yields are coming lower.
Yeah, I really don't see the Fed being able to really cut much more than another quarter point in December. Besides that, I think inflation's got to get significantly lower. I think we have to hit 2%, maybe even see a less than 2% for me to feel comfortable, but that the Fed can really start cutting rates more. Because really, we talked about the unemployment rate that's going to come out on Friday. If it's not really bad, why cut? Why cut at all? Just let things simmer out and let some of this inflation bake out of the marketplace.
Yeah, and maybe the inflation baking out will be the best thing for this midterm yield, which would be the best thing for everything to get through this. So yeah, hopefully that comes to fruition. Hopefully get these housing costs in check, and that'll be good for everything. Okay, we're moving on, closing in on our big story of the week. Finally, just want to touch up on this last week, the Trump trade. Brian, you missed this last week, but we had these were the picks: Palantir, Amazon, NVIDIA, Tesla, PayPal.
Yeah, paint with a capital P, really, right? Palantir, Amazon, NVIDIA, Tesla, and the capital P, PayPal. We still believe in this trade, and I'm sticking with it. It's probably going to end up paying dividends here during the future as a new leaders emerge in the economy on those top S&P large cap kind of names.
Okay, let's move it into the big story of the week, MicroStrategy. So if you are a MicroStrategy believer, you think that Bitcoin is just a treasure. You just want to collect as much of it as you can. And you might want to have what a MicroStrategy thinks of is an infinite money glitch. They're going to have their stock, which they can hold as collateral. They can actually get more cash by selling bonds on their stock, and they can buy more Bitcoin. So they really think that Bitcoin is just going to keep on going higher and higher. And the higher it goes, the more collateral they have to sell more bonds to buy, you guessed it, more Bitcoin. So it's effectively a leveraged way to buy Bitcoin. And investors are treating it as such. Now, is there any potential downside in that? Yes, of course, we know Bitcoin is very, very volatile, and there's certainly some uncertainty in it, and there could be changes in regulations around Bitcoin, which could cause the prices to to change dramatically. And also, borrowing money like that, the cost of borrowing can change, and it can become costlier and costlier to do so, and harder to repay their loans. Now, I think this is the really risky component of it, is that, yes, maybe if Bitcoin comes down and MicroStrategy is forced to sell some of their coins, maybe Bitcoin will be able to stomach that. But there's a big cryptocurrency ecosystem, Brian. I think there's a lot of alternative coins that they're known as. They are tied to the price of Bitcoin. If there's a mini collapse in Bitcoin that lasts a month or so, are those altcoins going to survive? Is there going to be a big domino chain reaction around the cryptocurrency world?
Yeah, I mean, I think that's really the risk, is how much leverage is going on in the system. Well, leverage in the sense of risky assets, like taking on more volatility. Now, the CEO of MicroStrategy has said, we do things that sell out the volatility in Bitcoin, which, look, Bitcoin as a currency hedge, as an anti-fiat play, obviously is way more volatile than something like gold. So I see what he's getting. And they may be using some sort of option strategy. We talk about this all the time. Can we risk less to make more? And it seems like there's some sort of asymmetric payout that they seem to be setting up, such that the value of the stock is far greater than the value of the Bitcoins that they own, right? So maybe it's that the stock can't go down below the price of the Bitcoins they own, but because obviously they would just end up selling Bitcoin and buying back their stock. But can it go higher than that? Well, it almost acts like a closed-end fund. A closed-end fund has limited amount of shares that can be issued. In this case, the same sort of situation, except for the fact that MicroStrategy doing these convertible bonds is essentially issuing the share demand that is being built up. And anybody in their right mind, any CEO, if the price of the stock is way over the valuation perspectives of where the stock is, and it's just trading on pure speculation, it's only natural to issue convertible bonds, being willing to issue more shares of stock, raise capital, and use that to leverage up the company, or at least do something with that overpricing in the stock. It makes sense that they're doing this, so I understand. It's interesting, Joe. I don't know if you have a theory on what they're actually doing to explain to investors, and if this stock is really valued, but maybe we want to look at what Bitcoin is versus MicroStrategy first.
Yeah, I'm just trying to bring up my charts here. Looks like they're not.
Well,
here.
as you start to figure out if we can load those up, basically when you look at the price of Bitcoin, right? This is going back to 2017. Over this last, 7-8 years, you see these super spike moves up in Bitcoin, and then there's this perception, wait a minute, this is maybe getting too far ahead of itself. Bitcoin backs off like 60% from its highs. It hits this doldrum for like 2 years, and then the cycle rinses and repeats. And clearly, the Trump trade sort of triggered the super boom higher in the price of Bitcoin. And then anything related to that, people are trying to gobble up and buy. And I think that's what shot MicroStrategy stock up significantly higher. And to me, if they're able to raise capital, right, buy extra Bitcoin, so now they have 2-to-1 to the upside or more, right? But they use optionality using a put, let's say, to protect against the downside. And then they go ahead and lend out their Bitcoin and collect income. This will give the payout of like a 2 or 3 or 4 to 1 to the upside, depending on how leveraged they went with the money that they raised. And it gives them downside protection that those coins are stopped out and the losses are limited to only the initial value of Bitcoins that they hold. So I think this asymmetric play, MicroStrategy being almost like a closed-end fund, allows the stock to trade at a pure premium to the value of the Bitcoin that they own. So you've got to watch out that premium collapses, right? Because it's trading at a premium on speculation that their 2 to 1, their optionality play out is going to pay off. Nobody buys the possibility of the trade paying off. You would just buy the actual trade optionality, figure out kind of what they're doing, set up the same sort of optionality yourself, and then get long your thing and short MicroStrategy stock. So I think, look at the chart. I mean, that skyrocket higher.
This is the all-time chart here. So yeah, so I think a lot of people's skepticism around MicroStrategy actually because they were a .com bubble stock too. So they had the .com run up. They went from a $10 stock to a $100 stock in a year, and then back down to less than $1 stock. So the fact that they've recovered from less than $1 stock is actually just a remarkable story. I think there's very few stocks in the history of the stock market that have had this type of a remarkable recovery. So that's one of the reasons for the skepticism. Now, are they just having another bubble formation? Well, their stock is directly tied to Bitcoin. So if Bitcoin's a bubble, then MicroStrategy is the worst bubble, I guess. But there's no evidence, there's no guarantee that would be the case. But what's going to happen? I'm just curious what happens to them if Bitcoin has like a 20% or a 30% drawdown like Bitcoin's been known to have.
Well, I mean, like I said, we get these super spikes in Bitcoin, and then certainly the bubble kind of bursts temporarily. Bitcoin goes down 60%. If you look at sort of its historical moves, I'd be worried that MicroStrategy.
By the way,
what's that?
Here's MicroStrategy over the last year.
Yeah, I mean, it's starting to form kind of a double toppy head and shoulders formation there on a technical basis. Where this is
and it's outperformed Bitcoin as you would expect something with leverage to do. Here's it compared to Bitcoin. Bitcoin, great year in its own right, up 143%. But MicroStrategy up 580% is just showing what leverage can do.
I mean, that's either massive leverage, massive speculation that their convertibles are working. Well, look, I mean, it's a smart thing to do. This is a company, like you said, .com. It reinvented itself. It was $1 stock. It reinvented itself. It made a comeback. It's got a smart CEO in the sense that he can market himself very well and their company and what they're doing and make people believe that it's the right trade and use some sort of systemic, optionality to their position. And, obviously a high degree of tracking to Bitcoin with it almost looks like a 10x move to the upside with 1 to 1, or maybe 2 to 1 on the downside. So yeah, I mean, risk less to make more. MicroStrategy is a play. I think some of it though is driven on that closed end fund kind of ish over premium paid to what's actually there, and I'd be a little worried about the stock itself.
So yeah, my understanding though is that they have to pay some premiums on the money they're borrowing for their stock, but they're earning money on their existing software business. They have a software business. They make about $400 million a year in revenue. They're able to cover their costs for borrowing on that. So at the end of the day, they can just pay that off with their existing revenue and own more Bitcoin. There'll be scot-free. Just the question is, do they own too much Bitcoin? Are they able to, hold that much Bitcoin? Well, I guess Bitcoin is just Bitcoin. If even if it goes to zero, they'll still own 400,000 Bitcoin and still have that revenue.
Exactly. And so there is some sort of, downside protection embedded in that strategy itself. But this is a wild ride. I mean, this is, somebody using Bitcoin to leverage on Bitcoin to leverage on Bitcoin. And it's paid off. I'm skeptic that the ARBs are going to start to figure it out and use optionality on Bitcoin on one direction and short MicroStrategy on another. And that will drive the stock, significantly lower. So that's something I've got to be careful if I'm going to buy MicroStrategy itself. I would be staying away.
Let's move it on to the trade of the week, Brian. Big news in Intel. Their CEO is out. Just their 18A chip, just a big flop. It's getting out there in some broadband capabilities, and it's just not performing up to snuff. People were expecting it to be able to compete with AMD, be able to compete with NVIDIA, of course, because they finally like have a chip that, you know, is on the same size as them. What's going on there? And yeah, it's just not performing like they thought. CEO is out. They're actually bringing in 2 CEOs now. Some people are saying it doesn't really mean much. I might be reading into it and saying that they're gearing up to spinning off that foundry business, spinning off their product design to business, have 2 companies. I think that would be a great move for the company. They'll be able to have that foundry business, and the foundry business, instead of only making Intel chips, which aren't that great, they'll be able to produce AMD chips. And by the way, AMD wouldn't have to pay a tariff if they're being made in America, and they'll be able to make NVIDIA chips. So I think that would be really big for the foundry business. Foundry business could be huge in its own right. They've spent $100 billion, or maybe they borrowed for free from the government $100 billion. Hard to tell exactly what that is, but there's a big investment in their foundry business coming out, and I think there's a lot of value there. They're going to be making chips, whether they're Intel or whatever, out of there, and I think more value if they're not Intel chips. And if they spin off the other side, yeah, they don't have to worry about the rest of the business. They can really focus in on their products, finally catch up to NVIDIA, which they've just been behind forever.
Yeah, I mean, think about it. If I'm NVIDIA or AMD or somebody like that, why would I use an Intel manufacturing foundry work? I'm giving money to Intel to make better chips and then outcompete me down the road. I'm not going to do that, right? And the government, you know, Intel is becoming more and more, you know, sort of a defense company. It's, you know, where the government wants to sort of have some protection here, get chips manufactured in the United States. In order to do that, I think you're right, Joe. I think they got 2 CEOs to break this company up in half, and then they could start manufacturing chips from other places because it'll be an independent company from Intel, and Intel, the chip maker, will be left as a research and development company, and whether they make it or not, who knows? But the foundry is going to be the foundry and try and compete with Taiwan Semi and others, and try and bring manufacturing back here in the United States and bring chip manufacturing here so that the government can have some sort of level of control over that. And so I think it makes sense. I mean, I assume, Joe, you know, based on our discussion here, you're kind of bullish about it. Do you have an option trade that looks risk reward wise a way to sort of play this split up?
I do. And just looking at the chart here, we've got some resistance here around this area. Where are we getting this run up today? Around this, we had a little mini run up to 26 here. And I think this is starting to look again like another cup and handle, kind of like the semiconductors broadly are for me. And again, I think resistance would be up here at 35. Brian, you and I like this style of trade where we, you know, can say, hey, maybe there could be even a buyout or a selling of part of their assets, which would greatly increase the shareholder value. And then where would be a spot of resistance? So I'm actually looking at a diagonal call spread where I am going to buy a nearer term option and sell a farther dated option where I think an area of resistance would be. So I think the breakout is going to be right here at $25. I want to buy that call in January. I want to own that stock at $25, and I'm going to finance that by selling a longer dated call. 35 area, an area I pointed out would be an area of resistance for me. And I can do that. I can actually collect money to put that trade on. You mentioned it. They've got a lot of U.S. money tied up, U.S. government money tied up in this corporation. I think they're going to act as a backstop for them. They might tell them what to do. They might even be behind this CEO restructuring. Or, you know, strongly recommending it. But they're going to support this company because they got a lot invested in this company. So I think the downside is limited. And I do think if they do make the right moves, the right structure, and by the way, this seems like urgency for this company. For me, this seems like this company wants to do something quickly. They want to get back. They've been too passive the last 10 years. They finally are doing something actively. So I like that as an investor. This is my trade here, area of resistance, area of support. I want to get in at these levels and get out at 35.
Yeah. So, I mean, here's the thing, like this trade, obviously you're collecting a nickel, right? If the stock gets above 25, I'd exercise my January 25 call, then I would be short that September call. So I'm called away, but I'm at a resistance level on this chart that you see that I'm comfortable being called away. So it's almost like getting a free shot play from 25 to 35. Now, what's the risk? No, nothing's for free. If the event doesn't happen where Intel goes above 25 by January, I've got to rebuy a new call in order to get that same sort of upside. Otherwise, I'm just naked short the 35 strike in September. So I might look then to buy an April, let's say 25 call if there's been no movement, or buy an April 27.5 call, something like that. Now, yes, I spend a little money, but think about it. Now I'm waiting for April to sort of, decay, the prices of those options to come down. I'm going to get that call a lot cheaper. So I still get the upside now. I can rebuy another call. We'll continue to update this trade. By the way, we're going to have a special here. I believe our website's going live by next week's show where people can get a subscription. They can not only see this trade sent directly to their email inbox, but as we update this trade, they'll get another email showing the update, and then you can act on it however you want. And there's some really cool deals, especially we're coming up on Christmas time, as a gift to yourself or to a loved one who also loves trading. You can get these subscriptions at a discount. We'll be offering them coming out very soon. So tune in as we sort of update this trade. I think this is a great way on a risk-reward adjusted basis to play Intel to the upside. It's a bullish trade, and the fundamentals that Joe, you laid out really make sense. So that's what we got here today on the show this week. Every Monday, please tune in here, 1 p.m. Eastern, the Trading Zone. We also post this on our YouTube channel, Equity Armor. We tweet it out at Brian Stutland, at Joe Tigay. So check it out there, and make sure you tune in every week as we sort of discuss the not only the trades of the week, but our big story of the week, which I think has lasting impact, and we've been pretty good on that. So make sure you tune in every Monday, 1 p.m. Eastern. We'll catch you next week, right, Joe?
Yep. Have a great week, and enjoy the Jobs Friday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.